morning, all. Ira Epstein with your morning flash update. And this update is for the 1st of March. Boy, that's exciting. 1st of March, 2023, about 8:13 a.m. Central Time. And as we look, the stock market tried an early day rally, but it's been giving that up as the morning has gone on. We're looking at the dollar getting beaten up and flirting with losing its bullish embedded reading. It's losing it at this point, and you're losing the bearish reading in the euro. The Mexican peso shot up to levels we haven't seen in a while. I know I put out this morning a special update for my clients to take profit on longs that I had recommended just 3-4 days ago. We had a nice rally. We're up about 72, 73 points from there. So I'm pretty happy with that. Sort of stalling out in the energies. I think you got ahead of yourself in natural gas, a short covering rally. I don't see a lot of new buying coming in. I can see people overstaying their hand, got caught in the frenzy, and away you go. And I have been trying to get my clients short the bonds and notes on a rally that just doesn't show up. In Bitcoin, it looks to me as though you can't play the short side here anymore, and nor am I on the long side. It looks to me as though the market wants to do one of these, just wandering around, not really doing much. A market that's been on fire recently, it started with a big move up about 4 days ago in cotton, and it hasn't really stopped. Here you are at 85.50. Why? Well, it doesn't hurt to see China doing a lot better. Now let's look at the morning economics. You'll see what I'm talking about. In the mortgage headline number, I would have expected declines. We got them across the board, 5.7 in the index itself, 5.6 in the purchase, the refi down 5.5. All we've seen are interest rates going higher, so that makes sense. S&P Global Group will release at 8:45 their U.S. final, and the word is final, February manufacturing sector PMI. They've already given us their first one. They expect a 47.8 compared to the 47.8 in the prelim reading. The ISM will release their U.S. February manufacturing sector index at 9 o'clock, and we're looking for that at 47.6, just slightly better than last month's 47.4. Construction spending, well, they're looking for an increase. I don't know if that's going to be the case or not. They saw a decline happen prior to that, so we'll see what happens. December was down. They're looking for January up. It might be the case. Energy stockpiles come out at 9:30. We saw API last night. It was nowhere near as big an increase as we've been seeing recently. But here's what's probably behind cotton and helping some of the other markets. China's National Bureau of Stats reported today that their PMI rose to 52.6 from 50 in January, and it beat the forecast of 50.5. Now, there were also other parts that they mentioned. Number one, you got to be careful here. You are coming right now, when you look at that was during their national holiday week, and COVID had ended. So you'll get a surge from that over a couple of period of time here, and from there we'll see just how that's going to hold out as it goes on. Again, that's the January number. You're still going to see the February number, and remember, you've got to get through this lunar holiday period. Very important, and that'll end up right at the beginning of February numbers. Germany reported its prelim CPI rose 0.8% month over month. They were looking for 0.6. It almost guarantees that the European Central Bank has no choice but to move on and do one thing and one thing only: go up by another 0.5 point minimum on their interest rate. They're fighting inflation that's not going away. The UK came out today with a bunch of housing numbers, and in those housing numbers, you see Mr. Bailey even coming out. As much as he'd like to stop raising rates, he doesn't want to get his foot cemented in, yet the housing is really coming down in a massive way. And that might be a good thing. You know, London housing became one of the world's most expensive. I don't know that that's so bad it comes down. Dubai is taking leadership now and starting to surpass New York, Hong Kong, London. Okay, somebody's always more expensive, and that's how those things play out. One thing I want you to remember is this Thursday, tomorrow, we have our live webinar. It will come on at 12:30 p.m. I will open it for you at 12:15. Invites have been sent out. If you didn't get them, you're not getting it. That means you're not on my mailing list, but there's a way to get in. All you need to do is come